All right, Brandon, what do you say? We take it to the max. I'm so excited to have you. This is the first time that you are actually a guest officially on Take It to the Max. You and I take it to the max every day, but this is
That's what I
this
was
is
gonna say.
pure.
Not on camera all the time, right? But
It's
I'd be
true.
lying if I didn't have a few pregame jitters.
Really, are you so
Yeah,
nervous right now?
just a little bit. I mean, when it's your first time on Take It to the Max, there's some nerves involved.
It is a very big deal. At
This isn't take it to the
least
medium, it's take it to the max.
that's true. That's true. And for the 4 people listening, they're happy to have you here. So thank you for being here, my
There's more
friend.
than 4.
You,
4
me, my
million.
mom, and dad.
Yeah,
No, I mean, we're finding our audience. It's happening. It's
okay.
happening.
Finding our
So,
footing.
hey, you know
Yep,
what? There have been a few things going on in the last 2 weeks, 10
right.
or so days that are greatly impacting the mortgage industry. You are one of my most favorite experts in this industry. Unpack them with me, my friend. What have you seen?
Well, I think just generally speaking, I haven't been around the industry since, the beginning of time, like some of our listeners, those 4 listeners out there. But I can't remember a time in the last 12 to 15 years where I've seen as many changes in such rapid succession as we've seen over the last 2 weeks at this point in time. So I'm sure around the like 2008 meltdown, and I was doing other things. I wasn't doing loans, but I remember things were changing at a rapid rate then too. It's different today. These changes aren't necessarily in most ways market driven, and they're policy driven, honestly, is what I'm seeing a lot of. And there's been a lot of changes. We talked a little bit about this on our Max conversations that we just had, but we can unpack each one of these kind of individually and kind of chat about it. So the first
I think
one,
we should.
right? Why not? I mean,
Yeah.
the first thing we saw FHFA, with their new director, Pulte, go into the Freddie Mac offices and take a look around and see who was in the office versus who wasn't in the office and who should be in the office. And some of the data and information that I saw around this was kind of eye-opening because Freddie Mac's a big organization, right? I think their workforce exceeds 2,000 people.
Whoa.
And they've got 3 pretty good sized buildings where, they have power, lights, electricity, water. There's probably, other expenses associated with these buildings. And what the FHFA said was that there was about 40 people in the office out of 2,000 in these 3 buildings. And so, of
That's not a
course,
lot of people there.
not a ton. Now we're still kind of not as much as we were, but we're still kind of in this like post-COVID, like hybrid remote work environment. But a lot of the private employers out there have kind of clamped down over the last 18 months, I've noticed, and said, hey, it was cool while it lasted. We just noticed that productivity's in the toilet since everybody's working from home. And it's pretty hard to monitor and manage your staff when you're not in the office with them. And I've experienced that too. I don't know that my situation's that similar to a lot of people's out there, but I can't work from home. I got kids running around all the time. I got distractions. I got a wife that is always engaged and busy doing something. And so it's very difficult for me to stay focused for an 8-hour workday when I'm working from home. So I can imagine that that's probably similar for a lot of people out there. And so the return to work mandate from the FHFA was, hey, we need people back in the office at Freddie Mac. They haven't even gone to Fannie yet. We'll see what happens when they go to Fannie. And then kind of on the heels of that announcement, I believe they axed the chief operating officer of Freddie Mac as well and the head of HR kind of in the same week in that same conversation. And so mandated return to work. We're going to take some of the executives and we're going to either replace them or even see if that position even needs a person sitting in it. And so that was kind of the first thing that we saw from Director Pulte in his capacity as the director of the FHFA. Then shortly thereafter, and I'm sure other things are happening, but the ones that were most publicized were the update to the UDAP or Unfair Deceptive Acts and Practices rule. Now I can understand this. In fact, the NBA, Bob over at the NBA, you're familiar with Bob Broekschmidt, the president of the NBA. He came out and said, hey, this is something the NBA has really been, the Mortgage Bankers Association's really been pushing for anyways. UDAP was on the agency side, the GSEs, Fannie and Freddie, was implemented during the Biden administration. And it was seen largely at the time of its implementation as a duplicative effort, meaning we already have the CFPB and the Federal Trade Commission and the various state agencies and regulators out there that are in charge of making sure people are in compliance with the unfair, deceptive acts and practices rule. We don't need the agencies as well when it comes to the servicers and sellers of mortgages to also be engaged in the policing of compliance for this law. It's additional expense. It's additional, costs to the loan system and processing and purchasing of mortgages. And in many ways, it's making it more expensive for the consumer. And so that was rolled back. That one was kind of like support. Like, I feel good about that, right? Like that
Yeah,
felt,
agreed.
refreshing to me to see that because we don't need it. The
Agreed.
other one that came out in the same week was the removal of the special purpose credit programs. And I can kind of see the reasoning behind this as well. And I think there's still a lot to kind of unpack and unravel. Maybe unravel is the word we should use when it comes to the government sponsored enterprises, Fannie Mae and Freddie Mac, because they've been under conservatorship really since the financial meltdown. And that was supposed to be temporary, LaDonna.
Right.
And how
Here we
many years
are,
here we are, like
15
it
years
feels
later.
like, a lifetime ago, right? Several generations removed from that market crash, and we're still in conservatorship. And so I know one of the things that the Trump administration has been vocal about even before the election was there needs to be some movement in the direction of privatization of these GSEs. So I think a lot of this, what we're seeing is kind of some of the rolling back of these implementations from the Biden administration that would make it more difficult for Fannie and Freddie to exit conservatorship. So these special purpose credit programs, although the announcement caused shockwaves in the industry, they represent a very small percentage of loans that are originated in the United States anyways. And I think the FHFA's take on this was, why do we need Fannie and Freddie responsible for this type of a product? Really, like, this could be a private product that, banks, credit unions, private investors could offer to the marketplace and manage and monitor. And it's not that big of a chunk of the mortgages that were originating anyways. And so again, it's adding fat to the process, right? And we're trying to trim the fat so that we can get as profitable as possible so that when we exit conservatorship, we have a leg to stand on, and we don't have a repeat of what we saw after the crash where we have to come in and bail the agencies out. Now, this is an oversimplification of what's going on, but you need really a doctorate in all of this stuff right now to understand it. And I'm by no means a world-renowned expert. I just read the news and then make my own interpretations of kind of what's going on. So
Yeah,
that
but I
was,
think that negates your level of expertise with this, though, because you are able to take and decipher the information and break it down so accessibly for the rest of us who read it and we're like, "Oh, I don't know exactly what I'm
yeah.
reading here." That is something that you do, and it's one of the incredible elements and aspects of what make you you. So don't be
Well, I
talking about my
appreciate
friend
that,
like
LaDonna.
that.
I'm
No.
not down. I'm not talking bad about it's not negative self-talk. Don't take this the wrong way. I just want the listener, are we down to one? Right? I just want the
We've
listener
lost the
out
3.
there to know that, like, and I think this applies to a lot of things in life. Like, go find your own information and formulate your own opinion about things. Because just because I'm saying, things are the way that they are, like, a lot of that's through my frame of reference and my perspective, right? But there's a lot of experts out there to listen to. And I think that's what I've learned in the mortgage industry in general is, you can really be an expert if you just listen and pay a little bit more attention than the next person sitting
I
next to you.
appreciate that take. I appreciate that, but I'm also not mad at you being the expert that people
Yeah.
turn to. So
Come
anyway,
on,
keep
come
rolling.
one, come all. Come as you are, as Kurt Cobain said, and we'll take you and we'll educate you.
Thank you. Thank you for working that in here. I was hoping you would.
Yeah. So again, like in the brief, first segment of this, we've touched on basically just the FHFA's behavior over the last 2 weeks.
It's
Now you
wild that there's been that much change because you're right. I can't think of even during the financial meltdown, these types of changes were not happening this quickly. So
yeah.
there's a
It
lot
was it
going
was
on.
mostly just like, "Oh, this company's out of business, so we can't do loans with them anymore, and this
Pretty
company's out of
much.
business, and so we have to pivot." Same kind of behavior as a result. You've gotta shift, you've gotta be able to pivot, you gotta be nimble, right? I think that that's kinda what's going on right now too with these policy updates is it's not gonna change the entire playing field, but it's gonna cause you to think differently about how you approach each play individually.
Totally
So
agree.
so yeah, FHFA, and then you had HUD being pretty active, FHA being pretty active during the same time frame. We saw in May of last year, FHA come out with an update to their appraisal process in that they were going to require lenders to allow for a borrower to initiate a reconsideration of value on the basis of bias. Bias was the key word there. It was if the borrower feels like there's bias or discrimination in their appraisal report, then they should have an avenue or a method to challenge that. And it was a nightmare at the very beginning because all of the lenders out there were like, well, I don't know how to do that. And that sounds expensive. And we have to hire people and we've got to train them and we've got to come up with a new system and a new process. And that's really the case with all of this stuff, right? Whenever the government or the government related entities or organizations come out and say you got to do things a new way, what people forget is it does cost money to get to that new path, right?
Very much so. And there's costs incurred and
Yeah.
regulations that now must be upheld and met. And now you need experts to come in and interpret how you should be implementing those changes. So, yeah, there's going to be costs.
I mean, just look at like one of the things that you're an expert at, bless you, LaDonna,
Thank you.
is like anti-money laundering. Like all similar, right? You have this requirement where organizations have to have an anti-money laundering program, an AML program in place. And there's a lot to that, right?
There's
There's
so much to it, and for some of these small brokerage shops, it really at the end of the day was me kinda shrugging my shoulders and being like, "Yeah, I know it doesn't make sense for you as a one-person shop to have to
yeah.
implement all of this. You have your eyes and hands in every single one of these files, but sorry, you're still upheld to the same standards."
Yeah. And so what do they end up doing? They end up outsourcing a lot of that in a lot of cases. If they want to be compliant, they have to make that
Right,
decision, right?
right,
So now they outsource and they pay for policies and procedures. They pay for third party audits. They pay for compliance checks, right? Which is all expenses that they have to incur as a business, which ultimately ends up costing the consumer at the end of the day, right? We
right,
know that about how these things work. And so nowadays you've got AML programs, you've got cybersecurity programs that you have to have in place, right? Identity theft is a new one that we've got to be paying attention to. So you have all these additional layers of costs that are getting layered on these businesses. And so all of that to kind of circle back to our original conversation here about the ROV policy is the original reaction was we don't want to do that because it's going to cost us money. And so what FHA did is they said, fine, it was supposed to take effect in July. They gave them an extra, I think it was 60 days, 60 or 90 days. And I think the final drop dead date was on Halloween of last year. You got to be ready to go to support this new update to the borrower initiated ROV process by October 31st. So that was really kind of the last we heard of it. And this was all part of the Biden administration's task force PAVE, Property Appreciation and Valuation Equity Task Force, that was rolled out to kind of root out bias in the appraisal process. So all of that is what led us up to last week's pullback of this ROV update. Now you can still do reconsiderations of value. The lender can still initiate a reconsideration of value. There's still a pathway to challenge value on an appraisal, or if something doesn't seem right, or if unacceptable comparables were used, or if something doesn't make sense, there's still a method to correct that we're just not going to see borrowers have a specific pathway to initiate a reconsideration of value solely based on the idea that bias occurred during the
I got to
appraisal
pause you
process.
right there
Yeah,
because this is one that I don't particularly love. I
I
don't
know you
love
don't.
this. I
Yeah, I
don't
knew it
because
right when I was
yeah.
saying it.
In my opinion, because we have seen examples of appraisals that have been influenced
Yeah,
based on the appraiser's bias to a
for
certain
sure.
demographic,
Yeah.
we know that it's there. It does exist. And so I actually liked that there was an avenue that people could challenge this.
Hmm.
So I understand that maybe they think it went too far and it was part of a woke movement. I don't know for sure, but I don't love this rollback.
Yeah, and I think TBD on how it's all gonna come to be, right? I don't have the answer for you, LaDonna,
It's okay.
on
I
the
don't need you to
why
have the answer.
behind it. Aside from what
Yeah,
we've already said and mentioned, is like this is an additional system, process, and procedure that adds expense and additional training necessities, additional compliance, requirements that have to be monitored and followed and adhered to, and there's costs associated with this. And I know, here's the thing, like bias is still unacceptable. Discrimination is still unacceptable in the lending process, right? There's various
right.
federal agencies and state agencies that are responsible for policing discrimination in the lending process. So just because FHA said we're not going to do this anymore doesn't mean all of a sudden every appraiser out there can be like, I don't like the color of this person's skin and dock them 200 grand on their appraisal report or whatever, right?
Right, right,
What we do know is that the FTC and the CFPB, for that matter, have been really heavy-handed in the last 18 months on lenders, underwriters, and appraisers that allowed biased appraisals to slip through the process.
right. But now with the dismantling of the CFPB as we knew
Yeah.
it under the previous administration, how much of
Right.
that is going to actually be caught now? So I again, I'm with you. I love the idea of letting there be justified checks and balances that really do make sense so that borrowers aren't incurring additional costs just to help companies pay for some of these regulatory oversights. I just think that there are other ones that could go before this. So
Yeah.
again, I like protecting the consumer. I think that that's really what it's about, and that to
Consumer
me was
advocacy is a big thing for you.
you're not wrong. You're not wrong.
And it is for
And
me too.
right, right. And so I just like on the record show, this was not my
Yeah.
favorite rollback.
All right. Put that in the comments too on here.
Will do. Will do.
Yeah.
What
I
else?
here's
What
here's
else
the
did we
other
have?
problem with that entire, like, system and process, because I look
Sure.
at it from I try to look at things from both sides, and I see your side. I was actually excited. My initial reaction to this was great, like, this is another opportunity to protect the consumer, right? But then I
Mhm.
started thinking about it, and I was like, if I asked 100 consumers on the side of the road if they even knew about this borrower initiated reconsideration of value process, like 99 out of 100 of them would have no idea that it even
That's a
exists.
valid point. That's a valid
So there's a
point.
gap there, right? Like, even though the
Yeah.
solution was proposed, like, here's what we can do about it, it doesn't even mean that that solution was actually put in the hands of the people that needed to exercise it, right?
Yeah, that to me is a consumer education issue, which naturally leads into many other conversations.
Right. Like
But
solving world hunger.
yeah, right. Exactly. Like you can literally only do so much
I know.
to educate your borrowers and consumers. So
So,
I hear what
so
you're saying.
I think there's got to be a better way. I think aside from, like, this borrower initiated process, I think what we really should be looking at is the root of the problem, because it's not the borrower's fault that this is happening. So why do we put the onus on them for them to have to solve it, right?
Oh, I like that. I like that take, Brandon.
So if it's an appraiser issue, what are we doing on the appraiser side to resolve the issue? Where's the additional education? Where's the additional checks and balances on the AMCs and on the lenders? Like I said, like if you get an appraisal report and you're an underwriter and you're reviewing an appraisal report and you go, that's weird. That doesn't make sense. I just did a loan or saw a loan in this neighborhood 2 months ago and the value was significantly higher and this doesn't add up to me, and there's some commentary in here that doesn't align with what we would consider to be non-biased commentary. Like there's professionals. The consumer's a consumer, right?
Right.
But there's professionals from start to finish in this process that should be able to raise the red flag and say, hey, pause, this doesn't make sense to me. So I think we can attack this issue in a different way, and we should be, and I don't know that we are, but that's where I would go with it in my hopefulness is what are we doing on the aging demographic of appraisers? And don't get me wrong, like I know some really good appraisers out there that are good at their jobs and they know what they're doing, and they might be older, right? But the reality is I believe the average age of an appraiser is somewhere between 54 and 58 years of age right
Yeah,
now.
it's basically what we're dealing with on the MLO side of things.
Ooh,
This
those are fighting
entire
words.
I know, I'm sorry, but it's true. This entire industry, with the exception, I feel like, of maybe realtors, it is an aging demographic.
Yeah.
And it is a real challenge to try to get people interested in it. And I think that that's another area that, is close to my heart. We both love this industry. I've been in this industry since I was 18, 19 years old, right? Like talk about the love for it, but it's not the sexiest part of a house transaction. And to try to go to, I don't know, 18-year-olds and be like, you know what, I think you would really love, I think you would love to become an expert in guidelines so that you can help to assess what programs people qualify for. They're going to be like, what? No, that sounds terrible. Hey, you know what, I think you would love reviewing a loan file from start to finish and combing out any possible reason why this person should not qualify.
Yeah.
Maybe an underwriter is the right job for you, right? Like we're just not going to see that happen. And so I think we as an industry need to be thinking of ways that we're going to try to attract those younger professionals who can see the benefit to this, who can see why it may be a viable career path for them. And again, I know that is a completely different topic, but that is something so top of mind for me as the CEO of a mortgage education company. I want as many people as possible getting into this industry purely from a business point perspective. But then on a flip side of it, I am a firm believer in competition makes people stronger. And so if we're having new, fresh blood being added into the mix, that competition may be what some of those rustier professionals need to kind of reinvigorate them. And I think that goes back to the appraiser side of things too. Don't get me wrong. I think appraisals are going to be one of the hardest hit by way of AI and the automation that we're starting to see come down the pike.
Yeah.
Over the last month alone, the advancement that I've seen in appraisal technology and what people are developing and churning out there, it's blowing my mind
Yeah.
how good it is and how obsolete it could make appraisers if they're not properly executing and implementing and adjusting to these new technologies and what they may do to their jobs. So anyway, sorry,
That's a good
side
combo.
tangent, but
I like that. Yeah. Appraisal
thank you.
modernization, right? There are all
Yeah,
these rusty appraisers. We need to get some WD-40 on them, loosen them up
that's
a
what
little
I'm
bit, right?
saying. Yeah, that's what I'm saying. How about we
They're
get a
getting
little bit of
squeaky too.
fresh appraisers?
Yeah. I mean, just like one last word on appraisals and then we'll move on
Please,
to another topic.
please.
Like, I don't know any 18 to 25-year-old or really anybody maybe younger than 30 that wants to do all of the steps and jump through all of the hoops that it requires to become an appraiser, right? Like, and
No,
I always joke with people because, and this is just, me being me, which is why I think you like me. Like, it feels a lot like me to me, like the days of like, you had to go join the village guild and you had to like you right to become a blacksmith or something, and you had to like
right,
find the town blacksmith and convince the town blacksmith to let you be an apprentice. And then for a period of 2 years you would just do a bunch of grunt work for the town blacksmith, and then maybe if you were good enough and if you developed the right skill set you could be your own blacksmith, but you'd have to go to a different town to do that.
right,
Like, I
right.
jokingly say that, but in a lot of ways, like, becoming an
It's true.
appraiser is not that different.
No, I completely agree. There was one point in when I was fresh in my career, when I worked for a title company, I would have to go around and do property evaluations for houses that had gone into default. And when I was doing that, I was like, you know what? Maybe I should just get an appraiser's license. I really love coming out and looking at these homes and making these evaluations on them. And then I looked into the process and I was like, "Are you
Stopped at the
freaking
thought.
kidding me?
Yeah.
Like, never mind. Why would I put my career on hold where I'm already
Mhm.
making decent money to go back to school, to have to get my bachelor's at the time you had to have your bachelor's, right?
Mhm.
And then go out and apprentice for 2 years and then do all of the other like, forget it. Never mind.
Mhm.
I'm out."
Yeah.
So I hear what you're saying. There needs to be a simplification and a expeditious process to becoming an
Yeah.
appraiser.
And I know, like, light at the end of the tunnel, PAVE was looking at this.
Okay. Okay.
So at one point, it's on the radar. Now, is it still on the radar? I don't know. The radar feels like it's moving around quite a bit on us right now.
Is there even a radar anymore? I
Is
don't
there
even know.
Yeah, right. But, like, it's an acknowledged issue, challenge, and problem for the appraiser industry. So I feel like at some point it'll get better. At least that's what
Okay.
we've been saying, and that's what we're telling ourselves so we can sleep better at night. Now,
Okay.
can I
Okay.
switch gears a little bit, LaDonna?
I would love it. I would love it.
Okay.
The appraiser industry is heralding us for being their champion and wanting to make things better. So,
Right.
we can move on.
Right. So this Rocket Mortgage deal or
Okay.
series of deals, right?
There's been a few. Yeah, I've heard the name Rocket recently.
Yeah. Now, what I'm really excited about is next year's Super Bowl commercial, because, like, what can you do now after what we've seen, right?
Right. Yeah, yeah.
Like, it's been a wild run, and we saw that. So interestingly, ahead of the Super Bowl, they talked about a big change coming, right?
Mhm.
There was a marketing rebrand that they announced at the Super Bowl, and so now some of their lines of business have changed names, and some of them have now kind of to more closely align with one another. Is kind of what I felt like. There's more just unity in their. Get ready for this one. This is the word that came to my mind, so I'm going to say it: nomenclature.
Good
So that
Lord,
I
Brandon. Of
figured,
course that word came to your
right?
mind.
If we're taking it to the max, let's take it to the max, right? So that was kind of the first drop in the hat, and then of course shortly thereafter, because the Super Bowl wasn't that long ago, right? It was back in
Right.
February.
Yeah.
They acquired Redfin, which was a huge transaction, right? And you and
Huge.
I and most
Massive.
everybody knows who Redfin is,
Yeah.
and it was a big acquisition. And some of this stuff in the additional acquisition that they just made recently, it's still kind of working its way through the red tape and all that stuff that it has to.
Sure.
But, like, the writing's on the wall for what Rocket wants to do, right? They want to create an
Yeah, they wanna
ecosystem.
yeah, absolutely. And they wanna control the borrower from start to
Mhm.
finish, and they're well on their way to it.
Yeah. And a lot of loan officers, I pay attention to the chatter on the different social media platforms. And, when you hear an announcement of this gravitude, is that even a word?
It is
Gratitude and
now.
gravity together, that's
Yeah.
serious thankfulness. Gratitude.
I love it. That's perfect. It's a
The
heavy theory
Yeah,
of
right?
thankfulness.
When you see an announcement like that, I feel like the initial response was kind of fear-based from the market,
Okay.
from
Sure.
the originator.
For sure.
'Cause
For
they're like,
sure.
"Great, how am I this one-man originator?" Because everybody at the end of the day, if you're an LO, you're in your own business. Like, you run
Yeah.
your business the way you wanna run it,
Right.
within certain constraints depending on where you work. But, I consider most LOs as self-employed, even though they're probably not. That was, like, what I noticed, fear. "Well, what am
Mhm.
I gonna how am I gonna compete with this?" Like, if Rocket owns Redfin and they control the search process, and that's what the challenge has been for loan officers for a long time, was how do I get to the consumer first?
Right.
Because most of them, a large percentage of them, are reliant on referrals from third parties, right? That aren't the consumer, real estate agents, financial planners, attorneys, divorce attorneys, tax professionals, whatever, right? A
Right.
lot of LOs struggle in generating their own business independent of a third party referral source. So this was a slap in the face, because now Rocket, who's already uber successful in the mortgage industry, a big name, high numbers, a lot of production, is now in charge of or running the platform that most consumers go to first. If it's not Zillow, it's Redfin, right?
Right.
To start their home search, or to start the question of, can I buy a house? Which is, your homie Brian View, right?
Yeah.
Right. He brought this up. It's been a few years now, but like, we're always focused on the point of sale. Like, how do I meet the consumer when they're ready to buy? Brian has this exceptional thought process about, well, that's great, but that's late. You're late to the party if you meet them when they're ready to buy. How about you meet them when they're thinking about buying, or at that point of thought, right?
Ingenious. So, so good.
So that's kind of what you get with this acquisition with Redfin is, okay, you get a borrower, a home buyer at 11:42 at night while they're lying in bed, opening up their phone and going, "Hey, maybe I should download the Redfin app and see what houses are for sale in the neighborhood that I want to live in, because I might want to buy a house." And they haven't even had a conversation with a real estate agent. They haven't even talked to a mortgage professional. It's that point of thought, right?
Mhm.
So yeah, there's some fear there for an originator going, well, if I'm not in that ecosystem, then I'm going to lose out on business. And maybe you are. I can't answer that question for you. But I mentioned this in our Max Convo. As an originator, and as really anybody in business in general, you got to focus on controlling what you can control at the end of the day, right? And you're not going to be able to unilaterally veto the Redfin acquisition by Rocket
Not gonna
Mortgage, right?
happen.
Your responsibility now falls in the area of, what do you do and how do you respond in your business, in your market, in your relationships, right? Because your relationships are more valuable than Redfin is. If I can say that out loud. Technically they are. I know there's a billion
We're gonna
dollar
have to make a phone call to make sure we can get that approved.
right.
I think you're okay.
But I think that they are. Like, my personal relationships with my realtor partners, or my builder partners, or my borrowers, like, those are, to me, as an originator, more valuable to me than a billion-dollar acquisition of a real estate search company. Redfin's more than that. I actually appreciate Redfin from a data perspective too, because they publish some great information on the markets, on equity, on valuation of the entire US housing market. And it is a good tool.
It is for sure, and I can't fault Rocket for the moves that they're
Right.
making. They're making these powerhouse deals that are so forward thinking. Like, good for them.
Yeah.
Good for them.
And then, throw Mr. Cooper on there as well, which was another blockbuster,
Right.
right? Because they're the largest servicer, or one of the largest servicers
Yeah.
in the country. You know what's most interesting to me, or maybe what I'm most excited about for like the next 6 to 12 months after these
Okay.
acquisitions, is to
Tell
see
me.
how technology changes in the mortgage space.
It's
Because
changing rapid fire.
Rocket by itself, a huge industry player, right?
Mhm.
Redfin by itself, a behemoth in the industry.
Mhm. Mhm.
Mr. Cooper by itself, huge, right? And
Yeah.
they all three, separately and independently, were using their own technologies to do what they do, right?
Right.
And so now all of that technology is getting rolled up under one roof. And that's interesting to see what happens
That's
there.
It's going to be massive. It's going to be massive, and I think there are so many technological changes that we're seeing so quickly that are improving consumer experience, that customer experience right from the get-go, improving it from an origination point. And some of these are going to help with exactly what you were saying earlier of they're actually going to make the process of getting a loan cheaper and more effective. So I'm here for it. I can't wait to see. I'm with you. I want to see what all the advancements in the technology and what they end up doing.
And I would say, you should be afraid. I just got done saying don't be afraid, but here's
Yeah,
a,
I
the
never said you should be afraid. Now tell me why I
no,
am.
but if you're a loan officer that's not, I don't want to say technologically savvy, but if you're a
Yeah, but
loan
let's be
officer,
honest, there are a lot of non-technologically
yeah,
savvy loan officers out there, Brandon. They're again, I'm not an ageist. I'm not coming for you for your age,
right.
but I have seen firsthand. We have classes that you and I conduct where we
Oh,
have
don't say it.
QR codes
No,
that
not a
people
QR
don't know
code.
how
What
that
is that?
people don't know how to use, and I never want to embarrass anyone, and so I
Right.
walk the entire class through it, but to me, every time, I'm like, "If you're not familiar with utilizing a QR code in 2025,
Right.
what's your system look like that you're utilizing in your origination?"
Yeah. Borrowers, because of or as a result of what's happening, Rocket acquiring Redfin, Mr. Cooper, the technological advances, the streamlining, the efficiencies, all the things that we've talked about. If you're not creating those same efficiencies in your process as a loan officer, then you will lose market share.
Completely.
I mean, there's just no other way around it. If you're not using AI in some way, you're going to lose market share. I think the best comment that I ever heard, because when AI first was kind of gaining momentum, and it really wasn't
Mm,
even that long ago, it was less than 2 years ago. 2 years
yeah.
ago, if you said chat GPT to 9 out of 10 people, they'd be like, who?
Yeah, right.
Today, if you don't say chat GPT, or if you even say I Googled it, they go, why'd you do that?
Yeah,
Why
no,
didn't
just
you
chat it.
GPT it? Right? I've heard that
Yeah.
before.
No, for
Like, that's
sure.
the world we live in. So I heard this a while back, and it's stuck with me ever since. You're not going to lose your job to technology. You're not going to lose your job to artificial intelligence, but you will lose your job. You will lose market share to a loan officer that is using technology and that is leveraging artificial intelligence. That's
Absolutely,
what'll
without
happen.
a doubt.
And I think
Completely agree.
these acquisitions will accelerate that process now. It is going
I
to
think
happen
you're right.
faster.
Yeah, I think you're right because if you can't set yourself apart now, you do not stand a chance when that consumer experience can be controlled from front to end.
Yep.
So now
Through
really is the
technology.
time. Yeah, you need to have those steps and processes and technological tools put into place now. Now, do
Right.
it now. Become an expert during this little bit of transitionary time. This is going to be the best chance that you stand. All right, my friend, we're getting close on time.
No.
I know. Well, here's the thing. I'll have you back. It's not like I won't because you're the
Where
best.
did it
You
go?
people could listen to this all day. I have no doubt about it. But, I like to try to keep it to the same time frames for in consideration of other guests. What final thoughts do you want to share about the industry as a whole right now?
There's opportunities. And we say that every time something like this happens. Every time there's a shift, every time there's a big move, every time there's a big update. I'd rather have it this way than the alternative where nothing's changing. Because
I
anytime
agree.
there's right? Anytime there's changes, there's updates, there's shifts, you have to act. You have to take action as a loan officer. And if you take action, you take the appropriate action and you find the opportunity, that's where you win. There's more
Mhm.
opportunities out there in the market when things are changing because things are different.
I
And you,
agree.
right?
Yeah, I like that, and I like that right now we do have these disruptions that are taking place. Again, I may not agree with all of them on a personal level, but at least there's something happening that's kind of rattling some cages and will maybe knock the dust off of some of these components and elements that needed to be revised and revisited. So I'm with you on that. If you if you could go back in time and implement a piece of advice that you have been given, what would that advice be? What would you have changed?
That's heavy. That's a heavy
I
question.
don't
Here's a
know.
simple answer to it, though, because this has been on my mind lately. If you're building a mortgage business, and if you're a loan officer, you're always building, right? Because you're tweaking, you're changing, you're updating. If you're doing it right, right? If you're comfortable, then you're not growing, and you're not gonna, you're probably not gonna stay for much longer. Build your business. This is my piece of advice. Build your business today for how you see it in 5 years.
Okay.
Because if you wait to react to the technology, the updates, the communication changes, because communication is changing as well. If you wait 5 years to make those changes in your business, then it'll be too late. You'll have already lost. So get a vision, implement that vision, and just execute on that vision on a daily basis and make little updates and tweaks here and there. But start today and build for your future.
Love that. Where can people connect with you?
You can get me in any one of the platforms that you so desire. I'm on
I know, but
LinkedIn,
your name is
Instagram,
Brandon Christensen. That's a
Facebook.
pretty
Yeah.
common name. So do you have specific I'll link your
Yeah,
handles.
just
I'll do
link
you
me.
that solid.
I'm
Yeah.
not that interested. I didn't really put a lot of thought into my names on my social media platforms. But yeah, link me. Maximum acceleration, max class is really the main place, the main hub where you can find access to this type of information, additional information around education as a loan officer and as a mortgage professional.
It's because of you, my friend. Well, you are, as always, a fantastic guest. I will say it time and time again. You are my favorite. They can come for me when they listen to these and be like, I already heard you say Brandon is your favorite. You are every single time. You are. So thank you for being here. We're going to do this again soon because
Good.
I love hearing your thoughts. I love picking your brain. I do this on a daily basis, but it's cool to get to do it with microphones so that other people can hear your thoughts too. So
Love
thank you
it.
for being the best. Thank you for, as always, for taking it to the max with me. And let's do this again soon.
Can't wait.